I just feel like people that think they're gonna wake up one day and it's gonna be like 5,000. I just don't think it works that way. And the reason why is like when it went to new high in Asia overnight in December, I was watching it. So I was on the Bloomberg when that happened. And what happened was like the spot and the futures got like majorly disconnected, and then pretty instantly that was arbitraged, and it was right back in a range, but still higher than where it started. Gold, you're crazy. I mean, you look at what's going on in the U.S. They're reducing the Fed balance sheet. They'll get it to 7, and they'll have to turn and shoot it higher. It's getting bigger. I mean, it always gets bigger. It was 400 billion in the mid 90s, and now you got to 9 trillion. Now it's 7.5. The Treasury debt was 4 trillion back then in the Clinton years, and now is 35 roughly or something.
Gold prices are trading at session highs this morning after the latest data showed the U.S. economy grew above expectations while inflation came in cooler than the consensus. Global monetary supply and debt loads in the U.S. and worldwide continue surging. Also, while inflation has moderated recently, it will likely persist, and we may see higher inflation levels become normalized in future years. Therefore, there is a high probability that gold will break out to new all-time highs soon, and we could see a considerable bull market stampede that may elevate the yellow metal to $5,000 or higher in the next 2 to 3 years. EBTucker, editor of the Tucker Letter, expresses skepticism about the sudden surge in gold to $5,000. Meanwhile, he highlights gold's significance in the context of substantial debt, expressing confusion about the lack of correlation between owning Bitcoin and gold. Over the past 5 years, gold prices have risen steadily with less volatility, while Bitcoin has seen huge spikes and dips in price. Gold is extremely liquid. It's easy to buy and sell. Smaller cryptos can have less liquidity. Gold has an established regulatory environment, while crypto regulation is still evolving. Tucker predicts gold will rise this year and compares miners to resilient sharecropper farmers, emphasizing their persistent gold extraction despite challenges. Furthermore, he likens owning gold to owning a house, emphasizing its much stronger long-term upward trajectory. With the asset having a rather inconsistent start to the year, the price of gold is predicted to rise 10% in 2024 after Federal Reserve rate cuts, according to UBS. Indeed, the financial service company has noted that a Fed pivot could be the catalyst for the price to increase throughout this year. Now we present the clips of EBTucker's insights from his recent interview with Kitco News. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
See gold's obviously like looking really nice right now, and I think it probably moves up to 2150 this year, and that's a new zone for to trade in. But it doesn't mean that there's money coming in looking for, like, the production side of the business is totally left for dead. I mean, I hate to say it, but it's like you look at these companies, they're low debt, some of them pay dividends, the big miners, they're just under-owned by institutions. It's really bad. I mean, it's like really, you wonder, like, do they know something that we don't? I mean, yeah, because like a lot of people that are here talk about the 90s, they talk about the early 2000s. We had these bull markets back then. I mean, you don't have that right now. It's like you don't have it. But meanwhile, the size of the world system has gotten massive. All right, so you take like the world debt, say you're like 300 plus trillion, it's this giant pile.
Huge.
And then you take like $2,000 gold, it's worth like 13 trillion-ish, maybe 14, I don't know, it doesn't really matter, but that's about the size. And then you take like $42,000 Bitcoin, is less than $1 trillion. So you're like, okay, well, all right. So gold is really important, right? So like, because you own Bitcoin, to imply that you would not own gold is like really crazy. I mean, I don't understand. It's like if you own semiconductors, you would not own, like some food company or something. It's like no correlation. So I see the gold price this year, 2150. By 2030, I think the gold price will be $5,000. Okay, so that takes you, to like 30 trillion gold value, right? Like I grew up in the American South. You have like these sharecropper farmers that just struggle from season to season, and the Dust Bowl every now and then knocks them out. That's what I feel like the miners are. I mean, they just keep going, right? I mean, they just keep pulling this stuff out. We've seen all the graphs on there's no supply and all this stuff, but they keep pulling enough out to satisfy the market. But meanwhile, the gold market itself is highly financialized. Like you've got half the annual production turns over in the futures market on a busy day. Think about that. It's like half a year's production in one session. You've got options on futures. You've got hedging and all this stuff that goes on. So you have a massive financial market that's underpinned by a teeny tiny little production market. And so I just see people, they make these comments like, oh yeah, the supply thing's over, but it's like, I don't know. I really don't see it. I mean, and don't get me wrong. I mean, I'm not negative about gold. I think gold is like a portfolio without any gold is in big trouble. And the reason why gold's so important is that it's kind of like, why should you own a house? Well, not because you're gambling on the house, but like they've created this system where you just got to own a house. I mean, the long-term trajectory of gold, of a house, of Bitcoin is up. It's up. I mean, like, period. It's up. Like, I bought coins when I was starting out working, $400. Now they're, it's like 2,200 really for a US Eagle because of the broker charges and stuff. But to me, it feels about the same. I mean, it feels expensive and it felt expensive then. And you see how you get lost in the day-to-day.
Right.
They kind of like put you in this washing machine of news. But the big picture is that it's going up.
During the interview, EBTucker anticipated a substantial increase in debt by 2030, contrasting Bitcoin value with gold and the total debt of $400 trillion. By 2030, the debt is headed toward 118%, according to recent private sector projections. And while the recent increases in debt seem quite manageable, the federal debt cannot grow faster than the economy indefinitely. Eventually, private borrowing will be crowded out if the government's debt continues to grow, and interest rates will rise. At some point, action will have to be taken to rein in the deficit, but we may be a long way from that point. He recommends monitoring the reversal of the yield curve inversion, as it often precedes a recession and provides insights into potential future actions by the Fed. The ISM Manufacturing PMI survey has been in contraction territory, below 50, for 12 straight months. And in most cases, a double-digit contraction reading has coincided with a recession. Let's get back to the interview.
Bitcoin's not quite that sophisticated. So basically, with Bitcoin, you do have some derivative products, but you don't have the depth that you have with gold. I think slowly you'll have the depth with that. But the question is, at less than $1 trillion, how much money can come into this? Because what we know is that we talked about earlier is that numbers get bigger. Okay, so like that debt pile number is getting bigger. All right, so when I sit down with you in 2030, that debt pile number, I don't know if it'll be 400 trillion or 500 trillion, but it'll be bigger. Like the US debt doubles under every 8-year presidential term. It doesn't matter if it's split between two parties. It's like every 8 years, the debt doubles. So 2016, before Trump was elected, I think 16 or 18, anyway, it's like 34 now. It's the same difference. Like it's been 7.5 years or something.
Right.
It's almost doubled.
Right.
So like these numbers get bigger, and so they're going to get bigger. So the gold number is going to get a little bit bigger, but the Bitcoin number is going to get, think about this, 250,000 for a Bitcoin, okay, is like roughly trillion.
Yeah.
Against the backdrop of 30 trillion gold and 400 trillion total debt, the Fed is trying to remove the pandemic emergency money, which was 2.2 trillion. When I follow the repo market, they've removed 1.5 roughly. So they have like 6-ish 100 billion to go, and they're removing 90 a month.
Right.
They publish all this stuff, by the way. Richmond Fed has a paper when they started it explaining what they're going to do. Nobody reads it, but it tells you what they're going to do, and they're doing it. What happened here is they jacked the rate up overnight. I think the same time they started this repo game to suck the money out, letting the treasuries roll off as they matured, mortgage-backed as well. I don't think the rates really matter anymore because if you look, like the 10-year, is like below 4, and the 2 is like 150 basis points below Fed rate.
Right.
It's really weird. I mean, so I don't know. It just doesn't make any sense. I mean, and so I think like once they're done pulling out what they want to pull out, I think they'll kind of normalize that. And so what I would watch if you're like into this is I would watch when that inversion starts to reverse. Like that's typically when recession shows up. That's typically when Fed action's being predicted. And so if you watch that really closely, you get a heads up.
Over the past 100 years, the U.S. federal debt has increased from $403 billion in 1923 to $33.17 trillion in 2023. The consensus view is that money will keep flowing into the gold market. The purchasing of gold by central banks will, on its own, maintain pricing power. By 2025, most experts expect gold prices to have risen to well over $3,000 per ounce. Considering the anticipated increase in the value of gold in the upcoming years, What key factors do you think are instrumental in propelling this upward trend? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.